Hello dear traders and partners of AMarkets. My name is Daria, I'm financial advisor, and today we are going to discuss the situation in the global financial markets. So let's get started. Greenback's dynamic against euro is mixed. Investors are still focused on the Fed chairman Jerome Powell's interview, where he said that the regulator cannot guarantee a soft landing for the economy. That is a return on inflation to the 2% level with a strong labor market. The April data on the US export and import price index showed a slowdown in growth. The export price index fell from 4.1 to 0.6% instead of the expected 0.7%, and the import price index fell from 2.9% to 0 instead of 0.6%. European Central Bank Governing Council member Mario Centeno supported the position of some of his colleagues that the regulator may start raising rates in July. He stated that monetary policy normalization is necessary, but it must be done gradually to avoid the risks of slowing economic growth. Next, GBP USD, and the British pound is getting weaker against the greenback. The Bank of England Deputy Governor stated that the British regulator will have to keep raising rates to curb soaring inflation, but there are risks that inflationary pressure due to rising wages will be stronger than the bank had previously assumed. Experts are also keeping an eye on the escalating trade conflict between the EU and the UK, which is threatening to drop a number of trade requirements in Northern Ireland. British Foreign Secretary Liz Truss said that Britain would have no choice but to act on a one-way basis if the EU does not make concessions on trade issues. This situation increases the risks of a trade confrontation between Britain and the European bloc, which is even more dangerous amid the current global instability. Last Brent and oil prices continue to climb up. A possible embargo on Russian oil supplies to the EU contributes to the positive dynamics, although it is not yet fully agreed upon. This will lead to growth in demand for black gold, which producers will not be able to cover. Nevertheless, a number of negative factors prevent explosive growth. The head of the International Energy Agency, Faith Birol, stated that if necessary, more oil from reserves may be brought to the market. OPEC once again lowered its forecast of growth in global energy demand this year, citing the impact of the Eastern Europe crisis, rising inflation, and the pandemic in China. This year, it could reach 3.36 million barrels per day, that is 20,000 less than the previous forecast. This situation particularly guarantees that OPEC and its allies will maintain the previous modest rate of production build-up. So for now, these are the main trading ideas for the upcoming trading session. Thank you for your attention, subscribe to our channel, and we will do our best for you to reach success trading with AMarkets.